Hello, everyone. Casey Stubbs here. Can you guys hear me today? Make sure you guys can hear me, see my screen, all that fun stuff. I see Casey T here. I hope you're doing well, Casey. It's the Casey and Casey show today. All right. Okay. Well, we're going to jump right in. If you have any questions, Casey, if you got any questions, I know you've been great within the members area asking questions. And like you said, you have been taking profits early. That's okay. You know, I'm going to take some profits here in a minute. I wanted to show you guys this trade, ES. I'm going to close it 56%. So I'm closing that one right now at 56%. So that just got filled, 56% profit, cha-ching. You know, you guys can see here our overall P&L year to date is 20,000. So that's fantastic. Really excited about what's happening. You know, this nice little bounce has been great. Look at, we did a scanner trade, SOXL, 52%. So I'm going to close that one. And we've got, there we go. Close that for a little over because I got a better limit order on it. Yeah, I mean, really, APLD, we got to put 500 shares of it. Everything's looking good there. The only position that's not doing great is OKLO, but I'm looking at adding to it because you can see that we just bounced up above and our trend is reversing a little bit. So looking at adding another 100 shares of OKLO. So, I mean, 20,000 on the year is not bad. Especially when you consider we're doing this for an hour a week. And, you know, that's the whole plan. Replace our income with options for an hour a week. So today I want to hit up any questions, but then take a look at the scanner. And we've been making a lot of improvements to everything, and part of that is good and part of it is bad. Because when I do update something, a lot of stuff will change, like in the members area, and sometimes it adds confusion, and then I don't always do everything right. And so I guess the saying is that progress is painful is true, right? So I'm trying, and it always causes a little pain, but it's actually improved a lot, I think. And so some good news too is I'm working on an auto trading program. Along with improving our scanners and all that, I want to create an auto trading program where instead of replacing our income with an hour a week, we're actually just going to replace our income with no time involved other than just looking at the profits. And so that'll be available pretty soon. And I'm going to keep it really, really conservative, just like I always do. And I think I'm really excited about it for me and for everybody. All right, well, let's take a look at the scanner here today. We've got Intel with earnings coming out in 2 days, so we don't want to do that. Google with earnings in 2 days, but you know, Intel's really amazing. $67, that's really good. Annualized ROI on AXTI is 825%. That's a 3-day trade. Let's take a look at that one. It's a $70 strike. So let's look at that. AXTI. And so here we have, I just want to look at the chart first, and then we'll look at the option chain. 73. Oh, really nice high flyer. I like those, but then again, you know, like our OKLO was like a high flyer, but then it can come down really hard, right? I mean, it wouldn't even surprise me if this thing came down all the way to 20 because it's so high up. But that's again why I like to look at the report page just to kind of get a feel for, yeah, see, when you see that it's declining and the downside is 56%, that makes me a little nervous. So I probably would not do that. But a 3-day, you know, with 3 days and a high probability, you know, you got to play it by probabilities and ROI too. But if we, just so you know, the way that the downside works is I calculate all of the average price target. I take all the analysts. So some of them say 10, some say 23, some say 35, and then we get the average. And so the average, say it's 23, and so we're going to be at, 56% downside. And so that's where I come up with that. So let's take a look at the option chain, though, just to see. Okay, if the scanner doesn't have any setups under 40, let me see this here. If the scanner doesn't have any setups or under 40, around 45, should we go with closer or further? You know what, Casey? I would say that it depends on your cash flow situation, right? I personally like to go out further. That's my preference always. But if I'm tight on cash, I go shorter because I always want to keep the cash flow rolling in. And if I don't have if I go out for 50 days or 60 days, that's fine. And I like to do that because it's increased premium. But then I don't have enough cash flow to keep trading, then I'm going to go shorter so I can roll it over quicker. Now, the downside of that, everything that you do is always going to be a trade-off. There's never like, oh, this one thing is so much better. Everything you do is always going to be a trade-off, right? So what that means is if you go closer, you're going to get faster premium roll because you're going to be trading every 3 days, every 5 days. But the trade-off on the negative side is you have more chances of getting assigned, and you have more chances of then holding a trade for a long period of time that gets assigned, like right now I'm doing with OKLO, right? And so that's just the trade-off. Now, if we look at the option chain and we go for something pretty close, let's look at the 3-day. You can always look at the probability too and say, okay, do I mind doing a $1.55 at 70% ROI or 75% applied volatility? That's not bad. So we got $1.60 here at 75%. That's a trade worth taking, in my opinion, because look, you're at 74 right now. It's got to go all the way down to 65 in 3 days. I'll take that, right? That's a good trade. So let's put that in. We'll put the order in here. See, you know, and this is buying power's 63,000, so that's too big, right? But well, one, let's do 63. Let's do 3 contracts and see what that will do. We've got 18,525, but we got a nice 75% hit rate on that. And so buying power, we'll send that out. Okay. No, but that was a really good question. And so, and short, quick cash bursts are good. They really are. But I prefer the long term just because of, it saves me time, right? I want to be less like a trader and more like a person that just collects a paycheck. But then again, when we collect a paycheck, we do have to work. But that's what's nice about it, is the very little work these days. Very little work. So I want to talk too about the ES strategy, which I'm leaning, when I do the auto trading, I'm going to probably start with the ES. I mean, look at this ES. This has just been so nuts. Like, have we ever had a move like this? Look how many days up in a row. I mean, this is such a strong market. And so, I was trading this in this down market, and then when it popped, all those trades ended up being winners. We took no losers on it. And so it's a really nice strategy. The nice thing about it too, with the /ES, is the premium is really good, right? And so, everything, there's a trade-off. We've talked about that. But when you're doing the ES, let's just look at a shorter term one. Let's look at a 3-day. Your premium's really good, but the cost, so let's go up to 92% win rate. And right here, we'll do one contract. So in this case, we get $310. That's $20,000 in buying power. That's a lot. But that's why we go out further on this one. But $310, $20,000, that's not really reasonable. But let's pull it back out a little bit further. And we'll go to the same situation. And since I just closed one, I could take another one here, but we'll go to the 90% win rate, $26, $6,400 strike price. Go with one contract, and now we're getting $1,300 of credit, right? And that's pretty good for 10,000, right? So what is that? That's actually 13% ROI, a 13% return on your investment with a 90-some% win rate. That's really good. Now, if we talk about the loss on it, which I didn't do, so let's do that. Let's talk about it. If we talk about the loss, because a lot of times people are like, $318,000 max loss, that's not worth it, right? $1,000 for $318? No. But see, we want to understand what the max loss means. Max loss means that the S&P 500 goes to zero, you get assigned one contract, and that a contract becomes worthless. Now, when you trade this, your option will be assigned at 6,400, right? Because we looked, there's the put is 6,400. So if the stock market would go to just cancel this for just a second. If the stock market goes to 6,400, which is right here, which it was there just a couple weeks ago. So could it go back there in 2 weeks? Yes, it could go there in 2 weeks. So it's possible, but then we would just buy it at 6,400. And so how much does it cost to buy it? Well, it's a futures contract. So to buy that futures contract, we can see here, it will cost you, that's not just one contract. It costs $10,000 to buy the futures contract, right? So it's $10,000. You're going to buy it at 6,400 if you get assigned. And the good news about that is if you get signed a futures contract and then the market goes up like this, you're in good shape. The only real downside on it is if we hit a long-term bear market, you have to hold that futures contract for a long period of time. And then the other downside, which is probably the biggest one for people, is that they over leverage and they don't manage their risk properly. So if we look at this, I'm actually doing a test in another account here, and I reset the balance to 75,000 because I don't believe that anyone should trade the ES with less than 75,000, at least on a weekly basis, because it costs you roughly 10 to 15,000 for the contract. You want to give yourself room in case the market drops. Okay, now the other situation that we need to consider here is if you are taking a trade every week and the market keeps dropping, you have one position. Then the next week you add another one, you got another position, and you could have up to 5 positions at a time, which during that bear market that we just talked about, I did have 5 positions open. And so my drawdown was not super heavy, but it was sort of heavy. It was like 5,000 on a $70,000 account. And then my buying power had actually dropped a good bit as well because I had 5 contracts. Each one cost me about $10,000. So I had $50,000 in contracts. So my buying power was getting slim. But I always want to make sure that I have like 5 or 6 buckets, because if I'm doing a 45-day contract, that gives me enough to do one a week. And in a down market, you'll be doing one a week and you close one and then you open another one. And so you close one and open another one. In an up market, buying power is not a big deal because we might only hold it for a few days. But that's where it gets risky, because if you're like, oh, I can afford to go 2, 3, 4, 5 contracts, because every time you're only holding it for a couple days, the temptation gets really real. Okay, so like right now, I'm like, oh man, I'm up $7,000. I got a lot of buying power. I'm winning like crazy. I could just go ahead and take 5 contracts, right? And I could do that. Let's take a look. Oh, 54,000. I'm going to get $6,000. And like, it's just the numbers pop up. $6,000. Oh, 6,000 a week. That's awesome. And it really is awesome, but it's risky. And people don't understand the risk, right? They don't get the risk. Well, Bill, I did answer your email this morning, and the way I answered it, you can go check it so you can have it for your records. We don't use stop losses, right? What I would recommend that you check out is, let me see here. Go ahead and check out the training that I did on it. If you haven't been through, I'm not sure what access level you have. You're probably full access because if you're in here. So if you go into, I'll show you on the members area here. If you go in here and you go into the Learn the System tab, you can go through and learn all of the rules, right? I recommend that everybody go through steps 1 through 7, because it helps you understand how to replace your income with options, right? That's the goal, replacing our income with options. And so it's not going to happen overnight. It's not going to happen instantly, but it's a 7-step system, and it has access to all of that. The other thing that you could check out is if you go to this implementation session and you watch this video here, it talks about really good money management and how to do that, right? But you don't need a stop loss, right? So I think that mindset might come from trading with stocks or trading with other types of instruments. But what we do is we use what I call a time-based stop loss, and that means that when this options, let's take a look at my platform here. So if we take a look, you can see my position is open and it says days to expiration, 45 days. So when this gets to 21 days, well, make sure you check out that other video too. I'll put the link in the chat. This one is pretty good, at least in my humble opinion. Check out that video because I explained the whole process in there. But the point is this: we never even get close because we closed this at 21 days. So you're never going to get assigned. And I say that assignment isn't even that bad of a thing. So with cash secured puts, you get assigned means you own the stock. So I'm not going to take a loss ever because I don't mind owning the stock. I only do this on stocks that I absolutely love. And so because of that, I'm not going to take a stop loss. I'll just own the shares. I don't mind owning the shares because, even on the one trade that we were looking at, that I'm down a little bit, it just requires me to have a little bit of patience to either buy some more shares. See, this one was a little bit of a downtrend. You can see, went from 193 all the way down to 40, but I can add more shares because I like the stock. I think it's going to go up. And so, I'll just add another 100 shares and then I can sell calls on it. And so it's a pretty good scenario. But we don't even need to be assigned ever because when it hits 21 days, I automatically close it. So if the position right now is open $100 and I close it at 21 days, I collect $100. If it's down $100 at 21 days, I'm down $100. And so the time-based situation is what acts as your stop loss. So I hope that makes sense to you. And I believe that that's how I explained it in the email that I sent you, but I might not have. So hopefully I did. But yeah, so this strategy has been just amazing. We just started this one pretty recently, and you can see it's already made 7,000. You're welcome. Thank you, Bill. One other thing I wanted to share with you guys is with the futures, you can do something called the MES, and the contracts are a little bit different, but it's the micro futures. And let's compare some of these. They don't have, the expirations are a little different for one. So if we go out, they don't have a 45 day, so you could go to the 58 day. And let's just take a look here. And if we do the same, it's the same strikes, they're just smaller sizes. And so if we go here to the 90%, you're looking at 6,275, so you're getting a better price, but you're getting $31 a premium. And here's what I want to show you the difference. So the cost of this trade is only $941, but the premium is $155. And so that means we're just going to round up to $1,000 and we're going to say $155 in premium. That means we're getting 15% ROI in a 58-day trade. So as you know, anytime you do over 10% on your investments in a year's period of time, that's really good, right? Like the great money managers, they're going for 12% average, right? So if we do 15% in just 58 days, that's really good. And how many times does that happen in a year? How many times do you get 58 days? Well, it goes in several times, right? So you could end up with 30%, 45%, 50% return, maybe even more, right? Depending on what happens with the market. So this strategy is a very high premium. And the other thing that's really great about it is that it's safe because we're going for a 90%. Now, remember also, at 90%, we're taking the trade. So I'm just going to do one here. Actually, I'm not, because this is a specific back test, forward test. I'm testing this because I'm going to be launching this on an auto trading system, and I don't want to taint my record here. But I automatically put an order in to close this, which I didn't do. So we'll do that. So right now you can see it's up 8%. I entered the trade yesterday. I am going to automatically close this $25. So we're going to create a closing order. This is my stop loss essentially. Closing order, and we're going to do a good to cancel. And so I was received 25. So we just take that 25 and we divide it by 2. And, my math is terrible, but 25 divided by 2, I have no idea what that is. The computer has fried my brain. So 12.5. So we're just going to do this at 12.5. And we're at 50%, right? And so what this does, yes, it reduces my ROI, but it actually increases my ROI because it does two things. It increases my premium because why? Because I can roll it again, right? If I hold the trade for 3 days instead of 58 days, I'm now going from a 15% annual return to possibly a 2,000% because I'm holding it in 3 days, and then I close it again and again and again, and it just increases our premium rollover. The other thing that it does is we're looking at these contracts, and they are, high win rate, 90%. But that's a 90% if you're holding it to expiration. So if we close early, it increases our win rate even more because now instead of holding it all the way for 3 months, we're closing it in 4 days, 5 days, 2 weeks. And so the win rate jumps from like 90% to 95%. And when we do take a loser, it's not that bad because we're closing it at 21 days. The only way it's really going to be heavy is if we have a pretty crappy situation, like a COVID type situation. And, I post videos like this on YouTube trying to teach people, and I get a lot of pushback. And they're like, well, one COVID disaster and you're done. But it's actually not accurate. And people a lot of times will say things, especially on YouTube, when they don't know what they're talking about. You can take losses, but they're not going to be that bad. Because for one, you're only putting in a small percentage of your account on the trade. So, it's not going to be that catastrophic, right? And that's why I'm trading these out and doing everything in a real live environment. And so it's a good situation. The strategy is working really well. The other side of this is just to go up to the scanner. And, there's the ETF scanner too, which I'll show you where the link is. I'm going to put it in some more places, but people are like, where's the ETF link? If you click scanner quick start, ETF scanner's right in here. Now, I know that I redid the whole members area. All of this stuff is all brand new. I redid the learn the system section. And so some of you guys might be new, but some of you that have been around, it was really confusing for people. They're like, where'd everything go? But I'm just trying to get everything a little more organized. And that's why I have the 7-step system. And I'm working on even improving that. So, but anyways, you go in and you check out the scanner. The link is at the top. And you look for a good trade, and you just do this over and over again. Sometimes you get a good one with the under. This ONDS, by the way, see, I have a crazy brain. I go all over the place. But ONDS is a good company. Let's look at the report on it. Look at that. Nice. Like, I would buy this one. I would buy shares of this, so I would totally do a cash secured put on ONDS. It's a really, really good situation with this one. And so Um, they're growing at 198%. I saw some people on X, some very smart people talking about this. And so, yeah. So this has got a good premium, a good stock. It's low price, 76% annual ROI. You know, you could trade that one time and you've already, if you had $1,000 in your account, you buy $1,000 worth of that, you trade it once, you made in 1 year, in a 38-day period, you made what most money managers dream about for an entire year, right? So you can really be strategic and smart with these things. And the probability on it's 70%. So, and it's a stock that I would love to own too. So some of this stuff is just a really high strategy. All right, guys. Well, I'm going to be closing this session up. I'm seeing my chat is blowing up in the members area, so people get antsy. And so I want to make sure everybody's happy. Can't make them all happy, but I can help people replace their income with options, and that's the goal. Yeah, and Casey, if you ever have any feedback about the Freedom Score, you click Get Report. The thing that I like about it is they have no debt, right? They're growing. They made $124 million in revenue, and their chart looks good. They're still new. I think they do networking, wireless networking. So it's a lot of these tech stuff. So yeah, you could dive down and do a little bit of more research. But if you ever have questions about anything, you can always, or comments about how I can improve, you can put this in here. I read those as well. But anyways, yeah, I like this Freedom Score. I think it's a good stock, but you can always do more research on stuff too. And I want to improve this a little bit. All right, guys, thanks a lot. And we'll see you. Keep on replacing your income with options, everybody.